Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 31st, 2025, we are turning our attention to Intel Corporation, ticker symbol Intel, which has seen some dramatic price movements recently. Let's start by looking at the broader picture with the news and current events surrounding Intel, and then we'll dive into the charts. According to reports from today, July 31st, Intel stock is experiencing a slight decline, down 0.34% to $20.34 in the last 24 hours. This continues a challenging trend, with the stock falling over 12% in the past week and nearly 11.5% in the last month. Over the past year, Intel stock has plunged more than 34%, reflecting significant headwinds. A major catalyst for the recent volatility was their Q2 2025 earnings report on July 24th. Intel reported an EPS of negative 10 cents, a substantial miss against the consensus estimate of 1 cent. However, quarterly revenue did see a slight year-over-year increase to $12.859 billion, which was slightly above analysts' expectations. Despite the revenue beat, the increased operating loss of $3.176 billion this quarter highlights underlying profitability concerns. Intel's CEO, Lip-Bu Tan, announced a significant restructuring, including a 15% workforce reduction by year-end 2025 and consolidating manufacturing operations. This move aims for greater financial discipline, but signals a challenging period of transition. The company is also refining its AI strategy, shifting towards inference and agentic AI, moving away from a purely silicon-centric approach. A critical challenge remains in Intel Foundry, with a noted lack of external customers and reports of low yields on their advanced 18A process. This lack of external customers is significantly hurting the stock, as competitors like AMD and NVIDIA continue to show robust growth and gain market share in key areas. Analyst consensus remains a hold for Intel, with an average 12-month price target of $22.25, suggesting a modest potential upside of around 9%. However, some analysts, particularly from MarketBeat, maintain a reduced rating with a low forecast of $14, reflecting deep bearish sentiment. Now, let's turn our attention to the charts to see how these news events have impacted INTC's price action. Looking at the one-day chart, the overall trend for Intel since early 2024 has been undeniably bearish. We can observe a clear downtrend channel, with the stock consistently setting lower highs and lower lows. Notice the significant drop around late April 2024, likely following a previous earnings release, where the price fell sharply from over $35 to the low $30s. Fast forward to the recent Q2 2025 earnings report on July 24th, and you'll see a massive red candle for the July 25th open. This candle, opening at $20.675 after closing at $22.63 on July 24th, represents a substantial gap down, directly correlating with the negative earnings surprise and operational challenges reported. This gap down on July 25th solidified the bearish sentiment and pushed the price to new recent lows. Prior to this drop, the stock had found temporary support around the $22.50 to $23 level in late June and early July. This range now acts as an immediate strong resistance level that bulls would need to overcome. The current price of $20.34 as of the news places it near the multi-year low seen in late 2024, particularly around $19 to $20. The volume on these large down movements, especially on July 25th, is extremely high, indicating strong selling pressure and institutional distribution. For short-term resistance, the pre-earnings close around $22.63 is crucial, followed by the $23.50 level that served as resistance in late July. Now, let's zoom in on the one-hour chart to examine the recent intraday movements more closely, especially in the days following the earnings report. Keep in mind our one-hour data for Intel starts from July 10, 2025, and ends on July 18, 2025, so it shows the run-up and initial decline before the full earnings impact. Around July 15th to 16th, we can see a slight attempt at consolidation in the $22.80 to $23.50 range before the larger daily drop occurred later in the week. The hourly chart shows the volatility and swiftness of price changes, making it critical for short-term traders. Volume spikes during these sharp moves, like on July 15th and 16th, indicate active trading and strong conviction from sellers. The $23.10 level served as a minor intraday resistance for a few hours before the downward pressure intensified. Conversely, support was briefly found around $22.80 on several occasions during this period, but it ultimately failed to hold. Let's move to the 15-minute chart for an even more granular look at the most recent trading days, July 28th through July 30th, 2025. This view helps us identify very short-term support and resistance levels after the major earnings-driven decline. On July 28th, after the initial morning rebound attempts, Intel found some intraday resistance around $20.90 to $21.20. The price then gradually drifted lower, establishing new immediate resistance levels around $20.40 to $20.50. The stock has been attempting to hold support near the $20.20 to $20.30 range, with several bounces off these levels. Notice the relatively high transaction counts and volumes during these intraday movements, suggesting significant short-term trading activity. A clear pattern of lower highs, even on this 15-minute time frame, indicates that the bearish momentum is still in control for the very short term. Now, let's weigh the reasons to be bullish or bearish on Intel, considering both short and long-term perspectives. From a bearish standpoint, the Q2 earnings miss, indicating significant operational losses, is a major red flag. Intel's ongoing foundry challenges, including a reported lack of external customers for its 18A process and low yields, are critical hurdles. Competitors like AMD and NVIDIA are gaining significant market share, putting immense pressure on Intel's core businesses. The analyst consensus rating of hold and overall reduce from market beat, with a low price target of $14, underscores the cautious to negative sentiment. The sustained downtrend on the daily chart, marked by consistent lower highs and lower lows, reinforces the bearish outlook. Short-term, the price needs to break above immediate resistance levels like $20.50 and $21, with convincing volume to signal any reversal. Long-term, until there's clear evidence of the restructuring yielding positive financial results and foundry issues being resolved, the stock faces significant headwinds. However, there are some potential bullish arguments to consider. The revenue slightly beating expectations, despite the EPS miss, shows some underlying demand for Intel's products. The aggressive restructuring and cost-cutting measures, while painful in the short term, could lead to a more financially disciplined and efficient company in the long run. Intel's refined AI strategy, focusing on inference and agentic AI, could open new growth avenues if successfully executed. The current price hovering near the $20 mark could represent a potential value entry point if the turnaround efforts gain traction. For a short-term bullish reversal, we would need to see a strong push above $21 on significant volume, indicating buyer conviction. Long-term, if Intel successfully ramps up its 18A process and attracts external customers to its foundry, while simultaneously regaining CPU market share, a sustained rally could occur. The stock is trading significantly below its historical highs, implying substantial upside if a successful turnaround materializes. However, this is a high-risk, high-reward scenario, heavily dependent on execution and market conditions. Let's recap the important price levels and what to look for. The current price is around $20.34, which is very close to recent lows. Immediate short-term support lies around the psychological $20 level, and a breach here could quickly lead to the analyst low target of $19, with an ultimate downside of $14. On the upside, immediate resistance is found at $20.50, then $21, which are recent intraday high points. A more significant resistance stands at the pre-earnings level of $22.60 to $23, followed by the $23.50 mark that was briefly tested before the major plunge. If Intel manages to clear $23.50 convincingly, it could potentially target the $25 to $26 range, which served as a stronger resistance zone in late 2024 and early 2025. For unbiased predictions, the likelihood of Intel remaining volatile around current levels in the short term is high, perhaps 70 to 80%, given the mixed news and ongoing restructuring. A move towards the $22 to $23 resistance in the short term is moderately likely, around 40 to 50%, but would require positive news or a broad market rally. A break below $19, heading towards $14, is also moderately likely, around 40 to 50%, if further negative news, such as continued foundry setbacks or deeper losses, emerges. To reinforce the likelihood of an upside, look for consistent daily closes above $21 on increasing volume, indicating renewed buyer interest. For a downside confirmation, watch for a clear break below $20 with heavy selling volume, as this suggests the lack of significant buyer support at current levels. Beyond price action, keep an eye on Intel's official announcements regarding their 18A process, any new external foundry customer wins, and details on the progress and impact of their cost-cutting initiatives. Also, monitor competitor performance, especially from AMD and NVIDIA, as their continued growth will directly influence Intel's market perception. The next earnings report will be critical, providing further clarity on the effectiveness of Intel's turnaround efforts. This wraps up our deep dive into Intel. Always conduct your own research before making any trading decisions.